as I said in my CEO letter a few weeks back, I believe inflation is going to be stickier for longer. In other words, I think we're going to have a 4-ish% floor in inflation. I think the numbers today kind of reconfirmed that. The market got ebullient over a 5% print down from 6, but that still plays into what I think is going to happen. And I think a lot of it has to do with geopolitical issues. We have moved away from this whole concept of globalization. We moved to fragmentation. But nobody asked the question, if we want to have national security for food, national security interests for chips and energy, no one's asking this essential question, at what cost?
Yeah.
And so what we are seeing is we're moving more and more supply chains here, but at what cost? And I think this is just, much of this has to do with why I believe inflation is going to be higher. This may be the right outcome for national security. I'm not making a value judgment. This may be the right thing for our country and every other country as we move supply chain. But no one asks a question, at what cost? And I think these types of policies are going to keep inflation stickier for longer. And then, if we do believe inflation is higher for longer, and if we then see the result that the Federal Reserve has to keep rates higher and possibly tighten a few more times, then you have to ask the question, what does it do for assets? And what does that mean specifically then for commercial real estate? And the reason why I highlight commercial real estate is because that's the dominant asset that regional banks own. So right now, the problem that we witnessed over the last 6 weeks was a duration mismatch for some and an outflow of liquidity. We have not seen any credit issues yet. The question is going forward, could higher rates for longer, could that translate then into more credit quality issues in the future? And so these are the issues that we have to address.
I remember, and I went back and looked just now, it was July of 21 when you came on and said that inflation was going to be more systematical, that we were placing jobs over consumerism. Now that we keep hearing about, we're importing deflation from China to the degree we're importing it all, or that AI is going to result in huge jumps in productivity, is that going to be a material offset to this new function you're talking about?
Well, I don't think China's importing deflation anymore. I think if you look at their demographics, they have a demographic time bomb greater than almost any other country. They cannot. There is more and more evidence that more and more companies are leaving China because it's an expensive place to be now. And so China is no longer that exporter deflation. You have that as a fundamental issue. Yes, AI, I've heard estimates that AI could increase productivity by 30%. We'll all see. I think that's a muffled way of saying we're going to have fewer people working. So that's how you're going to reduce productivity, is you're going to have fewer people per job. I think one of the other reasons, getting back to productivity, Carl, is I believe if you look at the statistics, we lost productivity in the last 3 years. Whether that is remote working, and we had a higher
remote working. Okay. What else would it be?
Exactly, David. I agree. Thank you for that.
You're welcome.
I like that. Remote working, and so we certainly have seen that. So you said AI. I think that's going to be the big question related to inflation. Where are we going to see the boost in productivity? Because if we don't, that's another reason why we're going to have stickier inflation.
Well, to me, I've got to say that if you look at Aladdin, which is this just engine of growth that you have, that could be something where you might be looking and say, I could look for AI. But the fact is, this big movement is just starting of outsourcing pensions. This is an incredible business. These companies, what does an airline know how to do running a pension?
Good question. We're seeing more and more pension funds, insurance companies, endowments are starting to look at their internal cost of running their pension. We have shown we could do it better, cheaper, and more systematic. Over the last 3 years, we've raised $400 billion in outsourcing of portfolios. It's been public about some of the ones we won, whether it's a Royal Mail or a very large U.S. pension fund with 300,000 union workers. But the whole foundation of Aladdin, more and more asset owners are replacing their antiquated technology systems with Aladdin, and Aladdin is becoming one of the most important components. And what we saw during the few weeks of real financial turmoil, we saw a surge in utilization of Aladdin. All our clients were trying to look at what risk do they have and how do they manage it. And so another example why Aladdin has proven to be a really good foundational piece. And so more outsourcing of technology and more outsourcing of the entire asset management. And BlackRock, because of the foundation of our organization with technology, with iShares, and now with FMA, all our advisory work, we're able to bring that all together in a more comprehensive way.